Hello and welcome to InfraCircle. I am Deepak Sahu and with me today is Mr. Seshagiri Rao, he is Director of Finance at JSW Steel. Mr. Rao, thanks for being with us in fact today. And the first question will be, sir, industry is probably on a recovery path and it is quite evident from the numbers. You also posted Q3 numbers quite well. But how do you see the performance going ahead in Q4 and in FY18? And if you talk of JSW Steel specific, how will the production numbers pan out?
JSW Steel has given a guidance in the beginning of the year that we will achieve 15.75 million ton of crude steel production and 15 million ton of sales. So we are in line with that guidance. Okay. So if you see our 9 months number, so we are 75% of our production guidance and we are at a level of 71.5 or 72% of our sales guidance. So we are more or less will be on those lines. So we will be achieving that including Q4. But the overall demand supply scenario, if you look at it, in India demand is growing only by 3.5% in this year, steel demand. So we all expected in this year it would pick up over last year. So in FY15 the steel demand was over 5%. Whereas FY17 we are seeing it slightly down. So we expect that things should look better in the going forward in the next year.
And what are the basic cues for that?
Basic cues which we are seeing is the overall GDP growth is expected to be 7.1% in the next year. Then the steel intensive user industries driven by the investment cycle coming back. So that should drive the steel demand for next year. The thrust on infrastructure and the roads and highways and also in the rural economy. These three together should augur well for the user industries who consume steel. So it is better for steel. Okay. So with that we expect the steel demand to pick up at least to 5%, 4.5 to 5. Okay,
great. So last year we saw pretty much from the government side, a lot of protectionist measures were given to the steel industry, whether it be MIP, anti-dumping. Now MIP is no more and government has extended the provisional anti-dumping for another 2 months. Well, how do you analyze the overall scenario, whether all these steps taken by the government has really helped bailing out the industry from these the cheap imports, and what kind of steps still needs to be taken from the government to further spur the growth, in fact, in the steel sector?
No, only these measures which have been taken by the government, we are very thankful to them. It was very timely, but the point remains is they are not protective measures. They are basically, I call it as a level playing field against the unfair trade. When the steel exporting countries, when they have surplus, it could not be absorbed in those countries. They are looking to put that surplus in the international markets, including India. So we requested the government to take appropriate steps to stop these unfair trade. That is how either MIP or anti-dumping or safeguard or quality order, all these measures have been taken by the government. It had a positive impact. Overall steel imports came down by 37% in the first 9 months of the year. But only one important development which we have to see globally in order to look at continuation of these measures or any additional measures which are required. Globally the scenario of excess supply over demand remains. Then the steel exporting countries like China, Russia, Japan and Korea, all these 4 countries together, their steel exports are not falling. They are more or less at the same level. So when this is the scenario, they always look for new markets to export, including India. So any relaxation in these measures will again increase or augment the imports into India. And at the same time, when these measures were taken by the government, the cost structure of the overall steel sector and also international prices were different. After that, all cost of production went up because coal prices have gone up, iron ore prices have gone up, steel prices also have gone up. So the reference prices in anti-dumping or safeguard duty requires to be relooked very urgently. Otherwise, there is a fear that the imports could go up. We have seen in the month of December, imports went up by 33%, December 2016. So I think we are requesting the government to consider it to revise these reference prices upwards.
So, but if you talk of prices, when initially MIP was imposed, steel prices were at rock bottom at around $250 to $60 per ton, and from there on, prices have hardened a bit. How do you see the outlook overall in terms of steel prices? And of late, we have seen raw material prices also creating a dent in the bottom line. How do you see the iron ore and coking coal front going ahead?
The steel prices were at its bottom just before the MIP. I think there is one important event which has happened. That event was stimulus by Chinese government. So with that, there is a domestic demand which has picked up in China. Therefore, their exports, even though remained at the same level, the Chinese steel companies started producing more, and they started consuming more of coal, more of iron ore. So coking coal and iron ore prices went up. In line with that, steel prices went up. That is the reason why we have seen a turnaround as far as the global steel pricing is concerned.
So if you talk of JSW Steel specific, you have been like backed around 6-7 iron ore blocks in Karnataka. Now you're like pretty much safe in terms of raw material, because earlier you used to procure much from NMDC.
Yes.
Steel Ministry, what we have learned that there are some changes being made in the iron ore pricing policy, because what Steel Ministry says that the state-run NMDC and VCCircle in terms of coking coal are engaged into profiteering kind of activity. But do you literally agree with this particular fact, what government says, and do you think that there should be a rethink on the pricing policy in terms of specific iron ore, because you are the key taker of that?
Yeah. No, any product which has to be produced by any country, we have to look at the comparative advantages of that country. The comparative advantage of India is our iron ore.
True.
Local iron ore. And whereas we don't have coking coal is to be imported. So iron ore pricing is concerned, it has to be definitely looked at. Particularly in the context where we are operating in the state of Karnataka, where the supply is restricted. Supply is restricted by the Honorable Supreme Court of India.
Absolutely.
It should be 30 million ton. Even 30 million ton today is not available to the user industry.
Right.
We have been suffering. When the supply side is restrained, and if you say auction, the user industry has to buy, and the auction pricing is done by the mining companies, then there is always a possibility that the prices will be artificially at a higher level. So there should be an appropriate policy as far as iron ore pricing is concerned in India. And that is only a comparative advantage which steel industry in India has. So I think what Niti Aayog has been talking about, that it has to be linked to the cost of production, cost plus pricing. Maybe that has to be very appropriate in the Indian circumstances.
One crucial question, so at this point of time when the entire domestic steel space is abuzz with stake sales and pretty much people are going in for like diluting stakes, JSW Steel is the one in Indian space which is looking for acquiring stakes in domestic as well as international steel companies. We heard about Stemco Steel, JSW Steel acquiring the Indian assets of Stemco. Now we are hearing that you have put in bids for Bhushan as well and Modern Ispat also. What is the exact status out there overall?
We are that way have been guiding that we will grow to the extent of 40 million ton over a decade through organic, inorganic growth routes. So we continue to evaluate various targets which are available in India. So we don't want to comment on any specific company.
Well, Mr. Rao, thanks a lot. Really appreciate for joining with us, sir.
Thank you.